Hello, traders. It is 8:03 a.m. Chicago time on Tuesday, the 25th of August, 2020. Thanks for joining me again today for episode number 1826. First things first, I need a mic check just to make sure I'm not running too hot or too quiet. This is a new high-end headset. Hopefully, will come across very, very clearly. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have some risk on. The NASDAQ is still negative on the day. NASDAQ is off 12 and a quarter points, or 0.12% of crude oil is leading the way. Euro stocks up 33 points, or 1%. The Russell's up 12.1 points, or 0.77%. And the DAX is up 96 points, or 0.73%. The bonds are down an entire handle and 15 ticks. Entire handle and 15 ticks. The Bund is up an entire handle as well, about 100 ticks. And that's where we stand this morning. Okay, running slightly hot. Let's turn it down a bit. Thank you. We don't want it to be hot. Anyway, crude oil again leading the pack, up 64 cents or 1.5%, trading at 43.26 on the October contract. The S&P is higher, as I said. It is trading up 13 points in a continued rally. This is the kind of market that really doesn't give you much to analyze or talk about as it continues higher and higher and higher. Lots of liquidity still out there, and money needs to be deployed somewhere, and this is where it's being deployed in the Fangman stocks and others, Tesla and so on. A lot of money being made that way, or value. Let's just say not money to be made, because those are two different things. A lot of value being created that way. Today on the calendar, we had GDP growth out of Germany. Came in at year on year, came in at negative 11.3%, was expected at 11.7%, so slightly better. Q on Q came in at negative 9.7%, a contraction, versus negative 10.1, also better. The IFO came in at slightly better, also at 92.6 out of Germany versus 92.5. This is really helping the DAX stay higher. The U.S. released its Case-Shiller home price month on month, came in at 0.2, expected at 0.3, and year on year 3.5 versus 3.6. The housing market remains hot. And then what we're expecting for today is 10 o'clock, a half hour after the open, we get new home sales, expecting plus 1%. And that's month on month, the new home sales for July, expecting 784,000 units. The rest of the day, we have Fed's daily at 3:25 p.m. and then the API crude oil stock change after the close at 4:30 Eastern. This is where we stand today. Let's take a look at what we were thinking about yesterday, what we expected in terms of context. Yesterday, the way the market had set itself up in what is a very interesting and quite unique, just a jigsaw here, serrated profile in the overnight session between Sunday night, and Monday morning here in the U.S. The expectation is for a small dip in the morning that pushes the overnight high and continues higher. That's the main scenario. Here's what actually happened. Let's compress it. This is what actually happened. Again, this is RTH only. We had our push down back up. We have a full swing here on the open. We actually had our opening swing back here, but we have a full swing for the IB. We end up reaching the IB down, reaching down as far as 3409.50, and then it's just complete and completely dead consolidation. We had VWAP, mid, and the point of control on top of each other. Okay, let me turn it down. Appreciate that. On top of each other before the market has this very large, or at least for this day, very large push up. We have this 15-point rotation, basically setting us up for how things are likely to play out for the rest of the session. For the close, this was very close to the close. There was no way I was going to look to short this on the way up. And when we finished near highs. So what we had yesterday was a neutral extreme close or neutral extreme day type where we test below the IB and then we push above the IB, we close near highs, we're moved away from value, and that's what we got. New all-time high at 34.29.50, and then from there, generally a neutral extreme forecasts a continued push higher. Now, listen, I'm going to say this again. It's a boring market to comment on because it's just buy the dip. It's just long-term money coming in and buying dips wherever it can. Money being deployed in the market. It is the U.S. market is currently very hot. And so money's going to chase that. And you know how the party ends when it does. So we have a lot of structure beneath us that we end up needing to repair, or likely not needing. I don't like that word. Likely to repair. Yesterday gave us another gap zone marked right here. Another gap zone between 33.96 and a quarter and 34.09.50 to contend with. We have several gap zones that we have left behind. As I zoom out here, we had one from 8/5, August 5th, August 3rd, and so on and so forth. So this is definitely pushing really fast. This is the same way we approached 3,300 from below. Folks thought that the market is likely to exhaust itself above the century figure and turn around, and it's not doing that. Currently, we're trading at 34.39.75. We stopped just a few ticks short of the mid-century figure of 34.50. And so if you're in Convergent yesterday, I talked about how the market is likely to turn down in the morning, and it did. I'm not always right, but it did. But I also talked about the fact that you do not want to stay your shorts as it pushes down. Now, that wasn't true for the NASDAQ. I was short the NASDAQ and got out far too soon. But so I didn't really get enough for my risk, or I didn't get as much as I could have for my risk. But in the ES, it was very, very clear that the push down was highly contested, and then it's likely to squeeze up. It was actually here. It was actually likely to squeeze up and catch shorts as it's always done. We did not, the attempt to fill the gap was very, very poor. We didn't even approach the gap mid left from the prior high to the open, and so that's a sign of strength. And so if we don't close the gap by the first hour, there's a better than 50-50 probability, historical probability, that we are not going to close it by the end of the session. So that's what I was leaning on. Up ahead, these levels up here, these stock zones up here are all measured moves, and there are areas that I'm expecting the market to stall at. They're not initiating areas. They're simply targets to aim for. Here's what's happened in the overnight session. When we look at the overnight, again, as I explain every time, the blue profile is the RTH, is the day session, the dark shading is RTH. And the orange is the full session. And of course, because the session has not started yet, the RTH session hasn't started yet, the orange in this situation is just the overnight profile. 209,000 contracts, okay volume, pretty much in line, but clearly a P shape as we push, squeeze very quickly and find the opposing force up initially at 34, 45, 75, 34, not 70, 34, 46, and hold steady up here. We had an impulse, pullback, continuation, and then a slight correction, and it's holding steady up in here. This is short covering yet again. Short covering yet again, and we are on top of VWAP. We have tested the mid right there almost to the tick, and we're holding steady in this area. So here's what I'm getting from what we are doing currently. We are in another gap zone. The yesterday's high is right down here. We are in another gap zone as we trade up here. So we're opening in a gap, but this is really primed here. We have a lot of structure to work with in this morning's session. We have some rejection right here. You could see that these 30-minute bars right here are rejecting the 34.45 area. And it's not able to stay above there very well. I'm looking for this morning, and I'll go over the scenarios. I'm looking for this morning to adjust this inventory, this inventory and sell off as a first order of business. We'll see how that works out. But it's looking kind of overdone at the moment based on the structure we have. There's a lot that beneath the 34, 36, it could very, very quickly get down to 29. It's not that much distance. I expect the gap zone to be closed today. That's a key element. Looking at the order flow real quick. Again, I'm noticing just terrible structure in the order flow. The order flow is just very, very ugly in the overnight session. There's just a lot of, again, this, we're talking S&P here. This is my live account on the S&P, and it's really sitting here with these heavy spikes. Normally, the book in the S&P is fairly smooth, with thin in the inside and an expanding on the outside. And what it's been doing is this weird, jagged kind of heat map. And so that's where things stand. It's really ugly how these structures are being formed, and it's not really trading against these structures very well. Thanks for letting me know about the mic. I'll move it out. Thank you. It's just hard for me to tell what it's going to look like, what it's going to sound like on your end. In any case, if you look at this heat map, it's really not providing for anything. There's not liquidity that's building up. There's not liquidity being tested. The order flow is difficult to read at this moment, in my opinion. If you're doing it either through CT Bookmap or if you want to read it, on the tape or on the DOM, I believe that the order flow is not so clear, and it's because of the way the market's condition has been, and that's to just lift and lift and lift and lift all along. And now we have these weird offers all over the place. So anyway, I won't dwell on that. It's just I find that again, these are the conditions that are not favorable to the way I look at the market or like to see the market. I have to play to my strengths, and this is not one of them. Okay, so let's dive into what's expected for today. Here's where we stand. So this morning, the expectation is for an open that pushes up, tests down, this looking for it to bounce a little bit, then squeezes into the 45.46 and is likely to push the high into 50. And then I'm expecting it to come back, and then I'm expecting it to finish near lows or extend lows on the close today. I'm expecting it not to hold these higher prices today based on the structure beneath us and based on how it's rotating. That's the primary scenario. The secondary scenario is an open that pushes down, impulses up. So we have almost an open test drive, consolidates here for a while, and then squeezes the high, and then holds the 34.50 before it continues to push these highs. Again, most people watching this are probably thinking, well, okay, so the market's going to go up or down. The goal here is to steal the line, I guess, from Margin Call, from the movie Margin Calls. I was watching segments of it yesterday again. The goal here is to anticipate what the music will sound like as the market opens. And so the key areas, what you should be taking away from this is the key areas: 24.50 right up here, 45 is another important response area. Beneath us, the 31.32, which we have already tested. And then beneath there is the 24. Sorry, this is 35, 31, and 24, 25 is the next area down. And then from there, once we get below the 25, then we get a retest of the point of control at 1650, I believe. Let me check that. The prior day's point of control is 1650. That becomes the key target down below for the market to rest up. Okay. So these are the key areas to play with, and that's where we stand today. Anyway, just be patient. It's important to be patient. It's important. It's important to be patient. It's important to hold steady. Just monitor how the market moves. The order flow is a little more difficult to read given the structure that we have, but overall, just pay attention to the auction, and that's where we stand. And go. Yeah. Great. Awesome. Anyway, I'll leave you with that. I'll leave you with that. I'll catch you soon. Take care.